Short exercise 2-8. We're going to prepare a trial balance. So remember, all the trial balance is, it's a list of all the accounts of a company that have a balance. So if an account had a zero balance, you would not put it on the trial balance. And the purpose of doing it is to make sure our debits equal our credits. Also, we could use the trial balance to then create our financial statements, which are the income statement, statement of owner's equity, and the balance sheet. So Henderson Floor Coverings reported the following summarized data as of December 31st. Accounts appear in no particular order and all have normal balances. So remember, a normal balance just means a positive balance. They all have a balance on the positive side of the account. So here's a list of accounts, and again, they are not in any order. So the first thing we need to remember is, what's the order, the proper order for accounts to go on a trial balance? First are the assets. So what we're going to do is we're going to look through here, starting with service revenue, and try to find the first asset. Well, service revenue is a revenue, not an asset. So we skip that. Equipment. Equipment is the next one, or equipment is the first asset. Now notice equipment has a $45,000 balance. And according to this, it has a normal balance. In other words, it's on the positive side. So we have to know our assets is the positive side, the debit side or the credit side. We consult our cheat sheet, also known as the expanded accounting equation, also known as Rex's famous accounting grid. So we look over here at assets. Assets have the plus side on the debit side, the left side. So for all of these assets, we're going to put the balance on the positive side, which is debit. So let's see, after equipment, are there any other assets? Cash. So we got cash, $12,000. Again, we're putting it on the positive side since it's an asset. After cash, we've got accounts receivable, $4,000. That's an asset. Remember, it's because it's something that the company owns and has a future value. And I don't see anything else that is an asset. All right, so what comes after the assets on a trial balance, which is the same order as the accounts on the chart of accounts? Well, after assets, we got liabilities. So let's start up here again, work our way down. Do we see any liabilities? Here we go. Accounts payable, $1,500. But we had to figure out, well, which side is the plus side for accounts payable? Accounts payable is a liability, therefore its plus is on the right side, the credit side. So this $1,500 I'm going to put on the right side, and that's accounts payable. Let's see, do we have any other liabilities? $15,000 salaries payable. That means that we owe, as of December 31st, we owe our employees $15,000 of pay. Do we have any other? Yes, we do have another payable, $7,500. That is another liability. So interest payable. All right, so we're done with liabilities. So after assets and liabilities comes capital. And with capital, we traditionally put the drawing account the withdrawals account when we're doing the trial balance. So let's see if we can find capital. Here's capital, $25,000. So which side is the positive side? In other words, the normal balance side of capital. The plus side for capital is on the right side. All right. And we need our withdrawals. Withdrawals are traditionally lumped together with capital as the equity accounts. And now notice withdrawals have the plus side, or the normal balance side, on the left side. So I have to put this $12,900 on the left side, call it withdrawals. And so we're done with the two equity accounts, capital, and traditionally withdrawals is right next to it. So after assets, liabilities, and then the two equity accounts, we have revenue. So let's find revenue. So we got $38,000 revenue. And which side is the plus side for revenue? It's over here on the right side, the credit side. Service revenue. It's looking down here. Do I see any other revenues? No, no other revenues. So we're done with revenue. So the order again goes assets, liabilities, equity, revenue, and now expenses. So I'm just going to look down here for my first expense. We got $10,000 for rent expense. And we look over here, expenses have the plus sign on the left side, the debit side. So all these expenses are going to go on the left. And I already forgot what that was. Rent expense. Rent expense. Now after rent expense, do we have any other expenses? We've got salaries expense, so $1,800. Salaries expense. Scroll down. And we've got any other expenses after salaries expense? We have utilities expense, $1,300 on the left side. Utilities expense. Now we're going to add up our debits. So we're going to add up these debits, put the total here, and add up these credits and put the total here. So I'm not going to bore you by watching me do math. So I do believe the answer is $87,000 on each side. Most excellent. All right. So now I showed you the proper order for the chart of accounts and for this, which is the trial balance. Again, the proper order is assets, then the liabilities, and then capital with its corresponding draw account, which is traditionally considered equity, and then revenues, and then expenses. Now, the secret of my accounting lab is they don't really enforce a certain order. So if you get these out of order, my accounting lab will not mark you incorrect. But however, if you put this $45,000 debit on the credit side, then that's obviously incorrect. Okay? And then what this company would do after they double check that debits equal credits is they could use this now to create the financial statements. The first financial statement is income statement. So let's look really quickly to see if we have a profit or a loss. So a profit, the formula for profit or loss is revenues, 38,000 minus our expenses. So it's easy to tell just by glancing at the numbers that, yes, this company does have a profit. And that's it.